Today brings the latest interest rate decision from the FOMC, and by and large markets expect a 25 basis point cut. Remember, last week we saw a rise in terms of jobless claims. That essentially nailed on the idea we're going to see a rate cut, but we saw inflation up to 0.4%, and that, as we see below, has largely eradicated the idea that we're going to see a 50 basis point cut. But there's plenty to look into for this meeting. Who votes for what? Remember, we've now got Stephen Miran in, so he could vote for a 50 basis point cut. Will we also see at the other end of the spectrum people voting for no cut at all? And also remember, we've got the dot plot to look out for this time around. And that means we essentially have the light shone on the fact that markets at the moment are pricing a significantly faster pace of easing from the Federal Reserve compared to the previous dot plot. So do we see a significant adjustment? And if we don't, is this a warning sign to markets that in actual fact, the pathway lower for rates could be slower than markets are currently pricing?